Well, the JSE is firmer with global peers mixed as investors digest comments by the U.S. Federal Reserve's chair, Jerome Powell. The U.S. Fed opted to leave the interest rate unchanged, the decision unchanged, that is. Let's get you some analysis. Grant Nader is with Benguela Global Fund Managers. He's a senior portfolio manager there, and he joins us now. Grant, shall we begin with that broad overview of the markets and how they're faring today?
Yes, good afternoon. So the markets are green, which is nice to see because over the period where we were closed, global markets were lower than what we saw on Tuesday. So a reasonably positive start, and all sectors are actually positive, barring resources and mining. So that's where there's a bit of a breather today. The likes of Anglos, the gold stocks, Billiton, all of those under a bit of pressure. But broadly, we're seeing this trend we've seen the last few days where there's good demand coming in for the SA industrials, and the retailers, that's still in play, and the banks and the financials. So the markets overall, I would say, are looking good, up 0.5%, but it's the broad breadth that's very encouraging that we're seeing there at the moment.
Yeah. Grant, the World Bank saying that it expects the price of coal to weaken further in the next 2 years. This will obviously add more pressure for domestic coal exporters that are already battling Transnet inefficiencies. What will that mean for us here at home?
So look, as we know, our mining sector is a very large employer, if not the largest in South Africa. So it isn't ideal. I think we do need to remember that these projections, these outlook statements, they're not cast in stone and they don't actually determine the direction of these prices. As much as coal is down significantly from last year in South Africa, a good 30%, the Richards Bay coal price. We must also remember that from December 2019, i.e. just pre-COVID to now, the coal price is still up over 30% from those levels. So the long-term trend is still positive. The Transnet issue has been a constraint, but I do see some signs of improvement there. It may be slow, but there is improvement. And if the miners can increase production, that will offset some of these creeping cost pressures that they're facing. The other important thing to remember, if we're looking at the macro landscape that's playing out, we've got this 70% of global demand actually comes from India and China. India and China are both growing significantly higher than other developed markets such as Europe and the US. You know, China's nearly 5%, India nearly 7%. So I think that's going to be a demand underpin for a long period of time. And to that, China's recently has still approved 253 gigawatts of coal-fired power stations, either being developed right now or approved to be developed. That's nearly 5.5 times South Africa's current total capacity of 45 odd gigawatts. So the coal story is not going away. There is a transition, we all know that, but I think it's going to play out over a longer and more gradual period than many of us think, because it's not an easy switch as we'd like to believe. So I'm not as pessimistic, and I think it might be under pressure, but I don't see it being a disaster at all.
No, listen, you never come across as a pessimistic guy, so I'm not surprised by that. Grant, MTN Ghana's first quarter profit rising 50%. That seems like, I mean, obviously quite good numbers, but it's a big contrast when you look at MTN Nigeria's numbers.
Yeah, first of all, it's a good number from Ghana. It's nice to see an improvement. They are in a very high inflationary environment, so the number is flattered by these high inflation effects that come through on all metrics. We have seen as the year-on-year inflation has dropped from around somewhere in the 40s to in the 20s. It's still very high, but that has improved the impact of finance costs, and they're earning higher rates on their cash balances as well. So there's a lot of year-on-year nuances at play that are improving that number. But the data number is positive. The data revenues are positive, and that's encouraging. So Ghana is now quite possibly the second biggest division in MTN. After South Africa, and it's leapt ahead of Nigeria. It doesn't have the same currency issues that Nigeria has, and that significant devaluation is what's causing the headache for MTN in Nigeria. So at least they've got something that's working in their favor at this point in time.
Yeah, absolutely. And then Sabia Stillwater, Grant, in the news for various reasons. I mean, yesterday, the name Sabia came up time and time again during their May Day rallies around the country. Of course, workers unhappy with the 4,000 odd looming job losses. They're accusing the governing party of being mum on the issue. But Sibanye is also dragging the Department of Mineral Resources to court over an exploration project called Akanani. What do you know about the case?
So I think this is symptomatic of the greater issue we've got in the mineral department. Over 2,400 mining applications were given last year, and none were actually processed. So there's a real lack of investment in the mining sector, and this is a classic example. This mining right exploration right goes all the way back to 2010 and was transferred along with the transfer of ownership of Lonmin. Sibanye has spent a lot of money exploring and prospecting in 2018, 2019. It looks like a rich reserve. There's a great opportunity there. It borders on the Anglo Platinum mine, Mogalakwena, and they should be able they have the exclusive right as a prospector to then have, it's effectively like a first right of refusal to go further and mine once they've done the prospecting. And that's been declined. So as to what the reason is for that, it's very unclear. I can't find an exact reason, but the Act does give them that right. And the minister, if justified, has the right of refusal there to that. So that's what's happened here. That's why they're going to court. They believe they have the right to mine this land. And they've been refused that right, has been given to someone else. And I think the key for South Africa is we want these mining rights to be going into the hands of people who have capital, who have the ability to deploy quickly to put these holes in the ground and actually create jobs and create opportunity. So hopefully there's nothing, that this isn't a long drawn out process, and hopefully it catalyzes some further movement. But more than that at this stage will only be revealed in the court case, I assume.
Grant, I'm hoping that our connection to you will stabilize as I ask you our final question. Shell reported first quarter profit, beating expectations after disruptions in Russia lifted oil refining and trading. What do you make of those numbers there?
Very solid numbers. You know, these oil majors have an incredible ability to generate significant amounts of free cash flow, especially around these current oil prices. So their trading division did well, their natural gas division did well. They've got significant share buybacks in place. They've been reducing their debt. You know, some companies or some industries, geopolitics hurts and some geopolitics helps. But the oil or the energy industry is certainly one that seems to be on the benefit end of some of the geopolitics playing out. And even if there's further geopolitical shocks in the Middle East, it would favor them. So they're a good place to be, strong cash generation. And I think we'll see more of the same as the year goes on from all these oil majors.
Yeah, certainly. Grant Nader, thanks as always for your time. He is a senior portfolio manager at Benguela Global Fund Managers.